What is the best business entity for your dealership? I get asked questions in my dealer training courses all the time. Should I start my dealership as a sole proprietor, a corporation, an LLC, a partnership? And I give the same answer every single time. I'm not an attorney, so I recommend that you hire an attorney, or you can call your Secretary of State's corporation division at your state capitol. And your Secretary of State's office will give you some limited business entity advice, but if you start asking some really technical questions, they're going to ask you to seek legal counsel. So I want to explain some very common business entities for dealers. Before I do, I want you to know, like I said a moment ago, I'm not an attorney, and I cannot tell you which business entity is best for you. And it's always best to hire a licensed attorney to explain which business entity is best for your dealership. However, if you are comfortable doing a little bit of research on your own, you may be able to decide which business entity is best for your business that you're getting ready to start. So the business structure you choose when you obtain your dealer's license, it really influences the day-to-day operations, taxes, and how much personal assets are at risk. So you should choose a business structure for your dealership that gives you the right balance of legal protections and benefits. Your business structure affects how much you pay in taxes, your ability to raise money, such as obtaining a floor plan for your inventory, the paperwork that you need to file, and what's more important, your personal liability. You're going to need to choose a business structure before you register your dealership with your Secretary of State. So you will more than likely need to get a tax ID number and file the appropriate local business license as well. So first, let's go ahead and talk about a sole proprietorship. A sole proprietorship, it's really easy to form, and it does give you complete control of your business. You are automatically considered to be a sole proprietorship if you do not have any type of business entity filings, but you do have business entities. So if you don't register as any other type of business, then you're going to be considered a sole proprietor. However, at minimum, a sole proprietor is going to be required to register in the county that you're located in normally. Sole proprietors do not produce a separate business entity. And this means your business assets and liabilities are not separate from your personal assets and liabilities. And you can be held personally liable for the debts and obligations of your dealership. So I always want you to be aware of that. Sole proprietors are still able to get a trade name. It can also be really hard to raise money as a sole proprietor because some floor plan companies will not give you a loan for your vehicles on your lot if you're a sole proprietor, and many banks will not even lend you startup capital when you're starting a dealership for the first time if you are a sole proprietor. Banks are very hesitant to lend money to sole proprietorships. Sole proprietorships can be a good choice for a very low volume dealership that's going to smell a very small amount of vehicles, and owners who want to test their business idea before forming a more formal business, but it does give you some liabilities on your personal assets. So I always want you to be aware of that. Let's talk about partnerships. Partnerships are one of the simplest structures for two or more people to own a dealership together. And there's two common kinds of partnerships. There's a limited partnership, which is called an LP, and a limited liability partnership, which is called an LLP. Limited partnerships have only one general partner with unlimited liability, and all other partners have limited liability. I want to repeat that. Limited partnerships have only one general partner with unlimited liability, and all other partners have limited liability. The partners with limited liability also tend to have limited control over the company, which is going to be documented in their partnership agreement. So the person that has unlimited liability usually does not have a lot of control over the business. Profits are going to be passed through personal tax returns, and the general partner, that's the partner without any liability, must also pay self-employment taxes. Now, this might be a good choice when you have a person that is providing, say, for example, the majority of the startup capital, but does not want all the risks that are associated with the dealership. And this might be a choice when a dealership has a so-called silent partner. So you've got one person that has no liability that could be the main financer of the dealership, where the other persons that are running the dealership would have liability. So that's called a limited partnership. Very popular when you have, say, for example, a silent partner that's coming up with the capital to start the dealership but doesn't want any liabilities associated with the dealership. A limited liability partnership is very similar to limited partnerships, but but it gives liability to every owner. So a limited liability partnership, called an LLP, protects each partner from debts against the partnership, and they won't be responsible for the actions of the other partners. So partnerships can be a good choice for a dealership with multiple owners, or like a professional group, or groups that want to test their business idea once again before forming a formal business. Limited liability company, LLC. An LLC lets you take advantage of the benefits of both the corporation and partnership business structures. And I'm by no means stating this is the best business entity to start for your dealership, but many small and large dealerships do start by filing a limited liability company or an LLC. LLCs protect you from personal liability in most instances, but not all. I want to repeat that. LLCs protect your personal assets like your home, your car, from liability in most but not all cases. So there are some scenarios where, say for example, you were an LLC and you lost a lawsuit against your dealership. They can actually go after your personal assets. So I get questions all the time. Like I said, I'm not an attorney. An LLC will give you some shielding of your personal assets, but it doesn't give you 100%. So talk to your attorney about that. So definitely keep this in mind. But you are definitely less risk with an LLC than, say, for example, a sole proprietorship. Profits and losses can get passed through your personal income without facing corporate taxes on this as well. So that's definitely an advantage of LLCs. However, members of an LLC are considered self-employed. And as an LLC, you're going to have to pay self-employment tax contributions, which are going to go towards Medicare and Social Security. Okay, so, if you're a business owner, you got an LLC, you're a dealership, then the great thing about it is, even though you are paying self-employment taxes, that's going towards your Social Security and your Medicare. So when you're at retirement age and you've owned this business for many years, then this is actually going to allow you to contribute to your own Social Security and Medicare later on. So LLCs can have a limited life in many states. So when a member joins or leaves an LLC, some states are going to require the LLC to be dissolved and reformed with new membership. And there are single-member LLCs. You can be a one-person LLC. So do please keep that in mind. And some states do require that you renew this every year, every 2 years, or every 3 years. So definitely stay in contact with your state regarding LLCs. So LLCs can be a good choice for medium or higher risk businesses and dealers with significant personal assets that they want protected, and also dealers who want to pay a lower tax rate than they would with a corporation. An LLC can be an excellent choice. And I'm not an attorney, so definitely get some legal advice on that. But I do know many dealers start their business with an LLC. Next, let's go a little bit bigger here. Okay, let's talk about corporations. Corporations. First of all, there's basically 3 types of corporations in most states. There's a C Corp, an S Corp, and a B Corp. Okay, so a corporation, a regular corporation, is sometimes just referred to as a C Corp, and it's a legal entity that's separate from its owners. Corporations can make a profit that can be taxed and held legally liable. So corporations do offer the strongest protection to its owners from personal liability. But the cost to form a corporation is usually higher than other business entity structures. Corporations also require more extensive record keeping, operational processes, and reporting. And unlike sole proprietorships, partnerships, and LLCs, corporations pay income tax on their profits. In some cases, corporate profits are taxed twice. I want you to be aware of this. First, when the company makes a profit, and again, when you're paying yourself dividends. Say, for example, you're a shareholder of a corporation that you have formed, then you may have to pay taxes when the company makes a profit, and again, when dividends are paid to you as a shareholder. Corporations have a completely independent life separate from its shareholders. So if a shareholder leaves the company or sells his or her shares, the C Corp can continue doing business relatively undisturbed. Corporations have an advantage when it comes to raising capital because they can raise funds through the sale of stock, which can also be a benefit in attracting employees. So you can always offer your employees stock options. Corporations can be a great choice for medium or higher risk businesses, those that need to raise a large amount of money, and large dealerships that plan to go public or to be eventually sold. Let's talk about the next one, an S corporation. Okay, this is sometimes called an S Corp, and this is a special type of corporation that's designed to avoid the double taxation drawback of regular C Corps, like I talked a moment ago. An S Corp allows profits and some losses to be passed directly to owners' personal income without ever being subject to corporate taxes. S Corps are going to file with the IRS to get S Corp status. So this is entirely different from the process of registering with your Secretary of State. So an S Corp has to be approved through the IRS. And there are special limits on S Corps, and I would definitely recommend checking with the IRS website for eligibility requirements. You'll still have to follow strict filing and operational processes of a C Corp, but S Corps also have independent life from their shareholders. So if a shareholder leaves the company or sells his or her shares, the S Corp can continue doing business relatively undisturbed. S Corps can be a good choice for a dealership that would otherwise be a C Corp, but meet the criteria to file as an S Corp. Finally, let's talk about a B Corp. This is what's known as a benefit corporation. Sometimes we call that a B Corp. This is a for-profit corporation recognized by a majority of U.S. states, and B Corps are different from C Corps in purpose, accountability, and transparency, but aren't different in the way that they are taxed. B Corps are driven by both mission and profit. Shareholders that are part of the B Corp are accountable to produce some type of public benefit. So you have to produce some type of public benefit in addition to a financial profit. So these are a little bit more rare. Some states do require B Corps to submit annual benefit reports that demonstrate how their contributions are benefiting the public good. So there's several third-party B Corp certification services, but none of those are required to be legally considered a B Corp in a state that has that legal status available. So you definitely want to check with your state. A B Corp is probably the least common way that dealerships incorporate, but it could possibly be a good fit for you. And I would definitely recommend speaking with an attorney if you decide to incorporate your dealership as a benefit corporation or B Corp. So they do have to provide public benefit under that. Okay, so I wanted you to be aware of that. Finally, let's talk about nonprofits. A nonprofit corporation. Some dealerships do decide to file as a nonprofit corporation. Nonprofit corporations are organized to do charity work, education, religious, literary, scientific work, and things like that. Because their work benefits the public, nonprofits can receive tax-exempt status, meaning they don't really pay state or federal income taxes on the profits that they make. Nonprofits must also file with the IRS to get tax exemption, which is a different process, once again, from registering, say, for example, a corporation with your Secretary of State. Nonprofit corporations need to follow organizational rules that are very similar to C Corps, and they also need to follow special rules with what they do with any profits they earn. So the IRS is pretty tightly regulates not-for-profits. For example, they can't distribute profits to members of like a political campaign or something like that. Nonprofits are often called that 501c3 corporation, and that's a reference to the section of the Internal Revenue Code that is most commonly used to grant tax-exempt status. In all my years training dealers, I've really only known a small handful of dealerships that have filed as a nonprofit. Now, maybe you have a situation where filing as a nonprofit would be beneficial to you and the general public, so this could be a business entity for you. So I'm always going to recommend, like I said, obtain some legal advice before choosing a business entity, but if you are comfortable doing your own research on your own, you could certainly do that. Or you can contact your state's Secretary of State Corporation Division with more specific questions. And, we do include Secretary of State contact information in all of our dealer license training courses. So I do hope that you find this information very beneficial. So thank you. I really appreciate you checking out the video today. Once again, my name is Dallas Johnson. I would sure appreciate if you would share these videos with anyone you know. You can also listen to our podcast. You can find that right there at dealerslicense.com. I do a podcast a little more often than I do videos, so you could definitely check that out or listen wherever you get your podcast. Once again, I'm Dallas Johnson, and I would really appreciate you sharing this information, and I would really like to become your dealer license training partner. So when you are ready to start your dealer license training and enter the world's greatest business, you can just go right there to dealerslicense.com. Once again, dealerslicense.com, and you'll be able to find all types of assets for you when you're starting or expanding your business as a licensed motor vehicle dealer. Thank you very much. I hope you have a great day, and I want to wish you the very best of luck with your business.